Good day, Toronto. Welcome to a new segment where I'm going to be reviewing headlines and articles of real estate news that kind of comes out, so it's a more timely manner. Now, what I'm going to do is release this video every Tuesday, and I'll continue with my uploads on Thursday, where I talk more about strategy and kind of what I'm seeing in terms of trends and market watches, right? So I'm going to be doing this starting, I guess it's the second week of January, and let's begin, because I'm going to try to keep these short, but kind of give you the headlines and my thoughts of each and every single one. So I have a whole bunch of articles that have been kind of saving, and if you have anything you want me to have a reaction to or provide some feedback, you can also send me a link via the email, put it somewhere on my screen here, or you could also just put it in the comment section below and I'll do it for next week, right? So the first one we have here, that's going to be the headline. The CMHC report, backed report calls for surtax on $1 million homes. So what they're essentially saying here is that they're going to try to get more revenue by taxing homes that are valued at more than $1 million, right? So this is basically essentially just an additional property tax from what it looks like. And they're saying that it's going to de-incentivize people from using real estate to store wealth, right? So my first thing I'm looking at this is, how are they realizing the value of $1 million, right? So is it what you bought the property for? Because anyone who bought recently, and I talked about this, actually I'll talk about this in Thursday's Market Watch. Every single freehold property in GTA right now is essentially $1 million. So if you're taxing at what you bought it for, that's everybody who doesn't own a condo essentially as of right now if you buy. But if you're taxing it based on the MPAC, which is the Municipal Property Assessment Center or Control, I forgot what the last C stands for, you're basically having a lower tax rate because MPAC comes every 4 years to assess what the property is worth, and usually what you buy it for is not what the assessed value is, right? So I don't know how they're going to deem the value of the property, but we'll see. And again, this is all just a report, but you can just see how where government's planning or looking to do, where they're trying to be a bigger government and tax more, right? So it's an MMT theory. Now, they're saying that they chose $1 million because, right now the Canadian national price is about $721, but if we're dealing with Ontario and BC, which are the more expensive properties, so instead of what they have here, 9% of households in the country are going to be affected, 13% of people in Ontario and 21% of people in British Columbia are going to be affected. So I don't know where they're coming with that number, depending on how they assess the value, but effectively it's going to be like a sliding scale, right? So anything over $1 million, they're going to get taxed that percentage, kind of like land transfer tax, and increase it. Now, I don't know how, again, they're calculating this tax rate between $4 to $6 billion in revenue, and they're going to put it back into like housing. I'm not going to go down a rabbit hole, but I'm not of the belief that bigger government is going to equal better things, because they've been talking about building more affordable homes since 2017 with multiple billions of dollars, and it's amounted to nothing, right? So if I look at this, is it going to scare some people to stop buying real estate or maybe more expensive? Absolutely. But if you're a person who's able to afford $1 million to 1.5 and you're stretching yourself, this is probably going to affect you the most, like the middle class or the first time home buyer who saved $200,000-$300,000 in down payment, making between $100 to $150, trying to get a home to start your family. Of course, I'm talking about Ontario. But if you're really well off and you have some taxes, unless you're taxed at a really ridiculous rate, if you add $1,000 or $2,000 in taxes to a property that's appreciating $100,000 a year, it's just a cost of doing business, right? So that's kind of what this is going to look like. Again, this is all still in talks. We'll see how it pans out. Next one we got here from Better Dwelling, talking about how BMO doesn't think that we're going to have interest rates increase in January. I've already predicted it's not going to. The earliest one we'll see is probably in March. But one of the things that is obviously affecting whether bankers are going to be doing an interest rate hike is Omicron, right? So over here now we have the head of the Bank of Canada Tiff Macklem talking about how, with Omicron, we may not be able to increase the interest rate as soon as possible, right? And this is essentially for me just a cover-up reason for why they can't. And they're always going to come up with reasons of why they can't increase the interest rate. And at the end of the day, right, if you increase the interest rate, it's going to slow down the real estate market because it reduces credit and it freaks people out. It's a really big driver. But the counterpart to that, if you understand macroeconomics, is something could break, whether it be the stock market or just the total economy, small businesses. It's not just real estate driven. It's just real estate right now is such a big component of GDP that interest rates, I do believe, and should go up so that it can make the real estate market slow down because it's like crazy right now. But now, when the GDP is so big and they're relying on real estate for the GDP to grow, they're kind of at like a catch-22, right? Like, do we want GDP to grow? So much of it's real estate, but if we don't tone down interest rate, then real estate prices will keep growing, but GDP grows, right? So you see how it's catch-22. And that's what I was saying, like, all bankers can do right now is they're just going to keep providing you reasons why they can't actually increase the interest rate, but they'll keep talking about how they want to, right? So they talk here about how inflation is 4.7%, and they're trying to target 2%. And anytime that inflation is higher than your cost of borrowing, we're in financial repression, or basically money is going to be stopped. People aren't going to be saving. They're putting into things where they go up in price, right? So you can see here it says Omicron tosses a wrench in this machinery and they're not unsure what it is. But when you scroll down to the bottom of the article, you can see that they're suggesting that they're going to have a forward guidance of your forward guidance, which is basically saying, hey, we'll tell you when we're planning to tell you about when we're going to increase the interest rate. And they've been saying they're going to increase it in January. And I'm like, there's no way they're going to do it in January. And Omicron is the perfect cover up for all of that, right? So that's why I was like, I don't really listen to this interest rate hike and business. And even if they do, you can watch the video up here where I talk about, like, you got to watch out for how it's going to impact you. But really, if you're in the market and you're cash flowing, it's not going to affect you. Now, the one thing I am watching out for is if the Feds, meaning the Bank of Canada, the equivalent in the US, does increase the interest rate, I believe Canada will have to follow just because of import-export and how closely we have to follow their market. So they have their first FOMC meeting on January 25th and 26th, and then one in March, right? So if they do increase in January, which is like in 2 weeks, there's a chance that we may also increase the following meeting, which actually is also March, right? So something to keep in mind of. Now, the next article we have here is also talking about taxes. There's a little bit of backlash right now in BC. I don't know if it's going to come to Ontario, but they're saying that property taxes are going to be subsidized, right? Meaning, which is the exact opposite of what we talked about here, how they're trying to add more taxes to property. But what they're subsidizing are, I think there's like application, you have to be like a veteran or a senior or a disability. And I think this is actually a good idea because you don't want people who stop working and they have like a fixed income to have their property taxes increase based on the value, because when they get too high and they can't support it, then they have to sell it. So maybe they're using that to kind of help with people of that nature, but it's not necessarily like they said here, a subsidy for low income households. I'm not really sure what the idea for this is, but it's just kind of contrary to kind of what the first article I was talking about, right? All right, the next one. Now we got here, foreign buyers own 1 in 10 recently built condos, 1 in 20 homes in Canada. I think this is definitely true. I've talked about this ever since 2016, 2017, even when the foreign buyer tax has kicked in, where you could circumvent it with corporations. And I think they talk about this in the article below, right? So here they're talking about how they're tracking it, and which is basically saying whether they're paying taxes here, right? But at the same time, if you're paying taxes here, but there's kind of like, say, your kid, a student, or somebody, or someone opens a corporation, it's harder to track, right? And you can see exactly here where it says an anti-corruption organization found none of the data is validated and no ID is required for a corporation to be open, right? So there needs to be some transparency in corporations on whether stuff is being bought up by foreign buyers or not. But at the end of the day here, we're just talking about how you can see in Ontario, the amount of new construction, which is there's condos after 2016, you can see that the percentage is about 3 to 5%, right? So you got your gray, which is the total, and the new constructions in 2016, which is after new construction after 2016. So you can see with like pre-construction, a lot of foreign buyers are buying it because, I mean, a lot of people are just throwing money at it. And there's two reasons, right? While I was away, I was talking to some people, and in Dubai and even Hong Kong, we know this. People with a lot of money, they want to come to the Western world, right? And part of doing that, and part of their plan for immigration, because immigration is a little bit loosey-goosey to get in, is to actually buy property at future times where they will close, right? So that's why when you look at price lists for pre-construction, there's always a column for deposit structure for local, and there's always a deposit structure for international. You don't put a deposit structure for international unless you know there's a lot of people internationally looking at this, right? So I do think this is correct. I was always saying about 4 to 5%, and there you go. Looks like BC is a little bit higher at 9%. And then this is with Canadian condos. You can see condos are even a little bit higher just because condos are easier to access, right? But they did say that the rate is kind of going down. Now, there's a lot of whiplash from my perspective of like how the media perceives people, right? And, I'm of the belief that the ultimate problem for a lot of this is cheap money everywhere, too much money chasing too few goods. But from a narrative perspective on the media, everyone's trying to find somebody to blame because no one's going to take responsibility anymore, right? So in a hierarchy of easy people to blame, your foreign investors and non-residential people are coming in and they're the easiest to blame because they don't even have an ability to vote. Then your next down the line is investors. Then you could like blame the boomers for not selling the property, et cetera, right? There's always someone to blame. No one just takes responsibility for it. And that's kind of the media's problem because the government is deflecting and using media to kind of send out these messages and blaming other people when in reality, if they just fix the money problem, this would in theory be fixed. Now, I'm not saying that's the only thing we need to do, but I think that's a really big cause of why prices have inflated so much. Just too much money, cheap credit, chasing real estate because if you leave it in the bank, it goes to nothing, right? Because of inflation. Then we got here. This one is just kind of funny. Like lumber prices have jumped up. They're saying how Bank of Canada used transitory, like lumber as a transitory. You can see here during the pandemic, it jumped up supply chain and it dropped back down, right? But now it's spiked back up. Ultimately, what this is trying to say to you is regardless of what people are saying regarding transitory, and I know the feds have retired that term, and I think Bank of Canada has as well, this is probably here to stay. And when cost of lumber goes up, you're going to have, price of homes increase as well because that's cost of what the home goes into, right? It's a big component. And I've also seen a couple articles and people talking about how recently there's been this new sewage backup thing that's been pushed onto condo developers, which also ultimately increased the price, right? So are there chances that prices are going to continue increasing, especially with the pre-construction stuff? Absolutely, because again, builders are for-profit businesses. They have a margin somewhere between 10 to 15%. If they don't hit it, they have to increase the price. So when the cost gets passed down to them, it ultimately gets passed down to us, right? That's what I'm trying to show you. Like secretly, regardless of how much money is being handed to you through like CERBs or EI or whatever, at the end of the day, when price goes up, we're the ones left holding the bag and paying for it. They got here another article from Toronto Star. Inflation expected to stay uncomfortably high in 22. Obviously, knew that prices were 4.7% in CPI. I've talked about how CPI is actually kind of rigged. They changed the calculation before. But, let's just entertain this article. They're saying that BMO is saying it's going to be 3.5% increase. I personally think it's more. Like all you have to do is just look at gas prices. I came back, gas prices are $1.42 right now. And they were like $1, I think, during the pandemic. That's a 50% increase, right? That's not correct. And remember, your inflation or your basket of goods is different from everyone else. If you don't drive and take public transit, gas doesn't affect you. Maybe you don't eat beef, maybe you're a vegetarian, the price of beef going up doesn't affect you. Maybe you don't eat eggs. Eggs have gone up like 50%. Maybe that doesn't affect you. Or maybe you're not buying a home and then you don't see this house price inflation. That doesn't affect you. But at the end of the day, what I'm saying is you can't use this basket of good from CPI because everyone has a different basket of good. And even if you do want to use it, the basket of good is kind of knocked off course where they keep skewing things and substituting things, right? So this is a really poor metric of whether prices are going up. You just really got to look at your grocery bill, right? But ultimately, what I use this for is if inflation is even reported or CPI as a certain amount and the cost of borrowing is less than that, so say 4.7 is the CPI right now, and my mortgage is 1.15% on a primary home or 1 or 2% on an investment home, that spread of 200 basis points or 2%, it makes sense to buy real estate, and that's the problem, right? Cost of borrowing is less than inflation. Next article, we got Bank of Canada monetary policy direction in 2022 could depend on the public's inflation expectations. Yeah, obviously, if the public is kind of freaking out and losing their crap where things are getting too expensive, the government has to do something. Otherwise, they're not going to be reelected, right? So this is where if enough people band together, then something will change, right? But until that happens, it's kind of up in the air. So it's hard to say without going off too much on a tangent, but it's kind of if I were and head of Bank of Canada, I would just leave, because there's no way you could do, like, you're going to be damned if you do and damned if you don't, because if you don't increase interest rate, stuff gets more expensive. But you increase interest rate, your GDP could like collapse, right? So it's a crappy job. I don't blame Tiff Macklem, but it's just a crappy job. And this is kind of this situation that we've been kind of pushed into. I got another one here, talks about kind of like predictions. And I wanted to put this into perspective because you have to remember, nobody has a crystal ball. You can use data, models, metrics, anecdotal evidence, and a combination of everything. And you can see here that from Canadian Mortgage Trends, they kind of listed everyone's predictions of what's going to happen, right? So let me just go down here. And to give you an idea, you can't base on your decisions on what someone's overarching thesis is, right? You really have to narrow down what you should and should not do. But if we look at prices, Royal LePage thinks prices are going to be up 10%, right? Remax thinks they're up 9%. Obviously, they're brokerages, right? RBC thinks it's going to go down 19%. Oh, sorry, the prices are going to go up 3%, but sales are going to come down 20%. TD thinks prices are going to go up 7%. CIBC thinks sales are going to come down 15%. Didn't give it a price point. And then Finch ratings, I don't know what that is. Anyway, so we can see how there's a huge spread of what people think it is, right? You have to understand what their ultimate agenda is, right? So take it with a grain of salt. Just see what your situation is. And if you're trying to read these headlines to try to time the market, it's just a bad idea, right? Now, the other thing they kind of talked about is a prediction of where the rates are going to be. I said in a prediction video, you can check up here, check the link up here, 2 to 3 interest rate hikes. So I can see maybe we get to 0.75 or 1. You can see here most of the banks think we're going to get to 1 or even 1.25. National Bank thinks it's going to be 1.5, right? But again, these are all predictions. And if you haven't watched that video, check it out up here. Even if mortgage rates go to 1%, if you're a, call it, savvy long-term buy and hold cash flow investor, yes, you can lose some cash flow, but you're still going to hold your property. But what it is going to do to the real estate market is that it's going to spook some people out. It's going to reduce a lot of people's buying power because interest rates gone up, and then it will slow the market down. Is this like 0.75% interest rate hike going to cause a crash? No. You're probably going to see, you call it a crash, like prices go backwards. Not until we see at least like 2.5 to 3% overnight lending rate. Because you have to remember, before the pandemic, mortgage rates were like 3.2 or like something like that. And that was like a good one. And then since the pandemic, it's like 1.1. So even if they go up to, say, at the end of 2023 at like 2.25, we haven't reached to the point where the rates were back before pandemic. So that's why prices are still relatively cheap compared to then. Right now, you do have to remember though, just because Bank of Canada really changes the overnight rate, the banks, if they are kind of like worrisome of the market, they can always change the mortgage rate because it's the prime rate plus or minus a discount or like an addition, right? So right now it's like prime minus 1.3, so it's like 2.45 minus 1.3, so you get 1.15 rate, right? So if they change that discount to say I don't know, minus 0.5, right, then you're at 1.95 interest rate. So that can always change. And I do see that every summertime they change the discount and they reduce it, and in the wintertime they increase it. And they do that because banks are in the business of lending money, right? So they have to be competitive with other people. So kind of like when HSBC came up 0.99, I mean, marketing and all that stuff, other banks had to follow, right? So we'll have to see what each bank's risk tolerance is for the real estate market and how much they're lending, right? All right. Ooh, this is running a little bit long. All right, so the next one talks about how Toronto rent prices are expected to climb a whopping 11% next year from Bullpen, I think it's Ben Myers. I do follow some of his stuff, it's pretty good. He's saying that prices are going to go up to $2,500 per month. Obviously, this includes apartment buildings and not just specifically condos, so you have to look out for that, but I do agree that rents are going to go up. I don't know how, I'm pretty sure, right, of what I think, but last year despite the lockdown, we let in still 400,000 immigrants, so they need to go somewhere, and like 40% of them go into the Southern Ontario area. So when you have such a big population base coming in and you don't build fast enough and they just need housing, you either stack them on multi-generational or like secondary suites. And when you have another 400,000 people coming in this year, that's why I do think rents are going to go up, right? Depending on whether we're seeing rents go up in freeholds outside of Toronto, like in the suburbs, or the maybe condo market will come back down in the core, depending on where the pandemic takes us and these lockdowns, right? So I do agree this will probably be a big year for rents. I don't know if it's 11%. I was going to say somewhere between like, 8 and 10, but something similar. And then the last one here is this is what homes in Toronto could look like in the future. This is, I think, a planner, a company designer, urban designer called Smart Density, where they're essentially building these homes that look like this. 6 stories high. And this is very common in like European countries, right? Where you have some like commercial on the ground floor, or maybe even not, just like an elevator or like a lobby. And you have, it's essentially like a 2 or 3 unit, like a duplex or a triplex, but they're newer. They're through vertical density. And you can see here that I think they did 2 or 3 750 to 1,000 square feet units, which is much larger than these condos that they're building in pre-construction right now. But it sounds like they had a lot of like hurdles to jump through to get it done. But one of the great things right here is that I think last year the city of Toronto removed the parking requirements for new development, right? Which is great, because in a little narrow home like this, there's no way you can put parking unless there's like a laneway in the back, right? So when you remove that kind of zoning policy change, it's great for kind of density areas where you're by subway. And I really think this is a great kind of the missing middle. The only problem is, let's see how long these things take, and obviously you're going to need people to build these things, right? So I don't know if it's going to be like big guys who are like pension funds. They're probably not going to do these. They'll probably just still doing like purpose-built apartments. It'll probably be like again, private investors or smaller businesses where they have the millions of dollars or backed by financing in some way, shape, or form to convert these homes into these rental properties, right? I don't think they're going to be sold just because it's going to be such a unique property, but I have seen a couple of these that are being proposed, and I'm a big proponent of Toronto taking the initiative to kind of have more density in these areas, because we're definitely going to need them, right? So if you're sitting on kind of like a property on the main street, it could become more valuable in the future if this stuff becomes easier and more popular, where someone can come and build it up, right? Anyways, that is what I have for the first 2 Cent Tuesday review. If you come across any articles you want me to provide some feedback on, you can email them to me. Link is right here. If you're looking for kind of real estate help, you can book a call with me using the link right here. It's www.chazan.com. And until next time, I will see you Thursday. Your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.